Gold isn't just a shiny rock, Auden Prime, Auden Doben Baim. It's the world's oldest defense mechanism against chaos. When governments start printing money like there's no tomorrow, gold is where smart money hides. It's a hedge against debasement, inflation, and the slow death of fiat currencies like the US dollar or the Chinese yuan. Now, enter Trump's tariffs and the return of trade wars. Here's what happens. Tariffs hurt both sides. If Trump drops a 100% tariff on China, it instantly makes Chinese goods twice as expensive for Americans. That means fewer Chinese exports, slower growth, and weaker economies on both sides. To fix that, both governments start printing more money to stimulate the economy. And that's where gold starts to shine. When fiat currencies weaken, gold usually rips higher. It's the same psychology that drives every major market bubble: fear, money printing, and liquidity. Think back to Bitcoin's parabolic run from 2015 to 2017. Sure, there was hype, but the real driver was liquidity. New exchanges, new trading pairs, and an altcoin mania that soaked up BTC like a sponge. Every time Ethereum or XRP pumped, it pulled more Bitcoin out of circulation, constricting supply and sending prices vertical. The same pattern repeated with ETH in 2020 and Solana in 2023. Massive liquidity expansion through DeFi and meme coins. When liquidity lines expand, capital moves faster. That's what and that's what fuels parabolic moves. Now, China's building its own version of that liquidity network. For gold, the Shanghai Gold Exchange has become the world's biggest physical gold market, moving over 27,000 tons in 2023. Unlike the paper contracts traded in London or New York, these are real bars of gold being delivered. And China's been quietly building massive vaults and warehouses to make gold storage and trade easier than ever. Why? Because China wants to make the yuan more trustworthy. If it's easy to swap yuan for gold, global traders will trust it more. To back that up, China's been buying physical gold at an insane pace, while telling its citizens to do the same. That drains the open market of supply and tightens the screws on global gold prices. Now combine that with Trump's 100% tariff talk. That's a flashing red light for future money printing. Investors rush to gold. Chinese trade partners rush to gold. Retail buyers join the FOMO line at coin shops. And it's not just sentiment. The macro backdrop supports it. The Fed's hinting at rate cuts, quantitative tightening is ending, US debt is ballooning, and stocks look overstretched. Treasuries are weak, fiat looks fragile, and that leaves gold and silver as the only real safe havens left. Looking forward, this setup could be the perfect storm. Trump's presidency is likely to keep pressure on China, fueling volatility. China will keep accumulating gold to strengthen the yuan, and the US will likely keep printing to prop up its economy. The bottom line, all roads point to gold. It's not hype, it's macro mechanics, and every time the world goes to war with itself economically, gold wins. Quick pointer. Gold is down due to macro conditions and most likely being overbought. This is not financial advice, but wait for the retrace. Wealthy wallets signing out.